Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn Associates with your agriculture update for Wednesday, the 3rd of October, 2018, just after 2:15 p.m. Central Daylight Time. As you can see, a down day in the grains. They tried to get up and stay up. In fact, wheat got up 12 cents from where it closed and gave that all up. The corn gave it up. Beans gave everything up. We're still noticing that the dollar index staying strong. Interest rates, if you take a look, strongest can be. These are the best rates we've seen in many, many years. Both, I think it's now the 10 and the 30-year are both over 3%. It's going to, in fact, impact mortgages. You can count on that. But what about the weekly area chart of closes? And keep in the back of your mind, this is a chart just of closing prices. And on those closing prices, I'm just looking as this goes on to see where is the market pattern. In other words, is it making higher highs, higher lows? But I'm always keeping a watchful eye on this red line, the 18-week moving average of closes, because I consider it the line in the sand. When a market gets away from it, when it comes back, the first challenge of it is often what? A resistance point. If the market's over and it comes back to it, it's generally a support point. You fight battles at those numbers. I wouldn't be surprised if that goes on. When we look at the daily bar chart, and each bar here just represents 1 day's worth of trade, you can see how the market's been grinding. I think that's the right word, grinding higher. It's had a pattern of higher lows and higher highs. The market is over the 18-day moving average of closes, which tells me that if the market slips back, that might be a support number at that 842.5. And the resistance has been very clear at the upper Bollinger Band, these black lines. Remember that Bollinger Bands are an algorithm designed to keep the market trading within them. Another way to say that is it gives you a theoretical resistance point and support point. Now, the interesting part for me is the market switched gears from all the way back here in August, got under the 18-day average, and suddenly it's trying to stay over both the 18-day average and go to the upper Bollinger Band. That's not a sign of weakness. It's a sign of a market that's trying its best to go up. Momentum is against the market. If you take a look, prices have come up and you've got both numbers over 80 on Tuesday, not on Monday. You need 3 days in a row for those numbers to stay there for me to say the market's converted from being overbought to embedded, more bullish. I'm not getting that signal at this point yet. In the meal market, the market's tried the upside. Today was a bit of a failure day. Actually, if you get under 310.80, you could say that the market's going to have lower highs, lower lows, and it might go back to that 303.20. It's an interesting play here because we're stuck in this sideways action. The seasonals turn up tomorrow, and they generally carry through a good part of the month of October. Seasonals mean if you go back in time and you look to see what the market has done during a certain period of time, more years than not by a lot, the market has rallied. History is limited by what goes on. History didn't deal with the trade wars. History didn't deal with China stopping to buy our soybeans. So you got a lot of new things at work, but I can tell you one thing, the battleground's that 18-day average of closes. Soybean oil's been the stronger of the markets, and how many days do we have up where it could be embedding? Both numbers are over 80 today. Both were over 80 yesterday, Tuesday, and both the day before, not the day before. So you've got your 3 days. That's called embedded. To make soybeans really friendly, actually, oil should be losing the meal in a traditional bull market. That's typically how it goes. There can be differences, but I'm just saying typically. I'm watching here that the market's up to the upper Bollinger Band. It's got its close over the 100-day average, and it's embedded. I'm going to look to see how the market now does on breaks. As long as the red line stays over 80, this market should stay well bid. In the corn market, you have a pattern of higher lows, higher highs, overbought having great difficulty in getting to this next level. We'll see if it can do anything from there. The wheat market has got a pattern of a lower low and a higher high, and it's now battleground, 18-day average of closes. Not going to upper bands or lower bands. Momentum is flattened out. It's void of trend at this point in time. Sugar, I want to thank Gary. I apparently had the October sugar up and didn't realize it. You know, I just read the charts. I might have even had it labeled that way. I had our staff fix it. But this is the March sugar, and you've got a lower low, higher high. I'd be a bit cautious right here. The first challenge of the 100-day average has failed in the past. It even made an attempt way back there, as you can see. Be cautious. This market right now, I think with that vertical rise coming from 1080 all the way up to 1238, bit ahead of itself, getting into, as you can see the reading here, knocking on the door of getting overbought. Any reading over 70 is there. So between here and the upper Bollinger Band, I'm looking for the resistance to show up and for pros to take money off the table. I'm looking for the same thing in the coffee. The coffee's in an uptrend. It caught a base group here. Notice the difference, how the market got away from staying under that 18-day average, flip-flopped, and it's just been punishing people that have tried to fight that. Now, it did peak out today and close on the day 100 and lower. Not sure if it's going to be able to get to that 100-day average. If you look at 106.60 on the close, you're just about 106.43 is the upper Bollinger Band, so it pulled back to that number. In the cocoa market, still bearish. Embedded reading, lower highs, lower lows. Until this red line gets over 20, I think this market still has the bears fully in control of it on rallies, selling aggressively into it. Cotton fits in that program too. It's got the embedded reading. It tries to rally, doesn't seem to be able to get going in any real manner. If you take out today's lows tomorrow, today's lows, and the lows were 76.08, you would have a pattern then of lower high, lower low. I can't tell you how the market's going to finish. You could have an outside day up or something, but that would turn the swing line back to the downside. In the cattle market, we're in what I call a stall that's right now going to lose its embedded reading. On the opening tomorrow, just look, you will lose that. Just how the math is going to set up. You need a strong update to prevent that from being lost. That means the market favors price and the 18-day average trying to make a run to each other. Doesn't have to happen, but it favors it. Feeder cattle's re-embedded. Now, if it loses the embedded reading again by the red line getting under 80, I'd look for prices on a pullback to the 18-day average to attempt it. Right now, the bulls have control of this market. This is stronger than the live cattle. Higher lows, higher highs. In the hog market, you went back to that upper Bollinger Band, the way you did there, the way you did there, and right back to that 18-day average of closes. So some of these concepts I give you, they work sometimes better than others, but I just see this so often in some of these markets where they go to those Bollinger Bands and then that was your play to come out. A lot of people say, well, you go the other way. No, that's not what it's about. I am now starting to formulate my next silver report. I like the silver action on the chart. It could go back to neutral for a bit here, but I'm going to do my best to cover for you the seasonals. I'm going to cover the weekly charts. I'm going to cover the daily charts, give you an idea if there's price counts in there, just the way I did in the gold market. And if you go look at that gold market, I wasn't off the money on that. So let's see what this does for you too. How do you get it will be your question, because we do cull our list. The best thing you could do is call our staff at 866-973-2077. They will make sure you're on it. You can always go to our website at www.iraepstein.com. Sign up for it there. You can do it here. Remember, I'm just starting to write it, so you're not going to get one in the mail tomorrow. I'll have it to you in a couple of days here, but just wanted to warm you up to it. That's how you get it. I'm Ira Epstein.